Right. So the assignment was on Aussie dollar, right? So you're supposed to take note when the current candle, the daily candle for today, when it trades below yesterday's low. Right. So this is Wednesday. Right. I need to get rid of this one. So we're talking of this low here. Let me drag my annotation to this one. This is yesterday's low. You see? Yes. This one is Wednesday's low. No, Tuesday's low, Wednesday's low, and now we've got Thursday's low. Right? So today, price traded below yesterday's low right here, 11 a.m. See?
Yes.
London open. Price traded below yesterday's low. The moment it was doing that, it was trading into fair value. Where is our fair value? On the daily chart. You see, price was trading into the fair value gap on the daily chart. So we've got a high probability bullish order block right there. Okay. So we're going to go back to the hourly chart. So if you were scalping, you'd have already noted that, okay, price has now taken out the liquidity from yesterday, right?
Yes.
Meaning a rate of sell stops. Your trade would have ultimately be this move here, because you'd have entered here in fair value. This move to the upside during New York session would have given you your 20 pips per day. And this move to the upside, when you're reading price action, you have to ask yourself to say, okay, in terms of scalping, what is this move trying to achieve? The moment you see 1, 2, the third candle, you ask yourself, what is it achieving in terms of price delivery? Number 1, London highs, right? Taken out.
Yes.
Number 2, yesterday's imbalance. You see?
Okay. Yes.
And a bearish order block. So when you're scalping, you'd have already anticipated these levels to provide resistance. Price was not just gonna shoot up and continue, right? Because we didn't have anything on the calendar after 3:30. Yeah, we had these FOMC members speaking, but they really didn't do much in terms of moving price. So when you're scalping already, that would have been a move for you to exit the position. There would have been no need for you to stay in that trade. Like you can see the examples, the trade that I sent to you when I was saying target 20 pips, I closed that trade just below, I think it was 392, and I started seeing price moving to the downside. Then I closed that trade. If you go on a 15-minute time frame, right? Once you have highlighted what price is trying to achieve. So once it traded above London session highs into a high probability bearish order block, you'd have already anticipated that the price is not going to keep going up. As a scalper, you should be in a position to read price like that. So when you go to a 15-minute time frame, this is what has been happening on the 15-minute time frame. You can see the consolidation. See?
Yes.
Price was consolidating, and then eventually it moved to the downside. I don't know what caused this move here. Something must have happened somewhere. This move that went all the way to the downside. I don't know what happened there. We need to check the news to see what has happened. Yeah. So in relation to scalp, you have to understand that, have a target. Because once your target is reached, scale out or get out of that position, because it's a scalp. You have not done that analysis to hold the trade for a long time. You have only done it to be in and out. Is it? So you can also see, I think, on NZD USD. Let's see, NZD USD control Y. Now this one did not trade below yesterday's low. Right? This one did not. This one did not trade below yesterday's low. Let's see on pound USD. Pound USD did trade below yesterday's low. You see, all those pairs that we were looking at since we started week 5 in relation to scalps.
Yes.
Right. You see, this is the current day. Price traded below yesterday's low, and price was already in what?
Fair value.
In fair value for longs. You see, price was already in fair value for longs. So once you see price trading below yesterday's low, which is right here, this is yesterday's low. It just happened now. That's when price went below yesterday's low. How many pips do you think are here? From here to there. How many pips do you think are there?
Maybe 20.
Let's see. Where's my crosshair to? Right, so this is an hourly chart. From here to there, bam, 22 pips.
Yeah.
You see?
Yeah.
Nyaya iripo manje Alec kato yanofana wanyatsonzisa ndekuti ukangoshuda ita scalping unofana kunge utori pamacharts uchiona zvichidi
Zvichiitika.
Zvichiitika.
Ndorealize nhasi mai kuti unofana because nhasi handechingoti pandongana mukandovha ndavhura ndichiona zvichichi. Ndopandarealize unofana kunge utori pachat.
Yeah. Uchitoona zvichiitika then you get in. Like sandaita in trade iroro long position andatora pa Aussie dollar. I opened it after ndaona news dziri negative for dollar. You see? When I saw that the news was negative for dollar, these initial jobless claims here.
Yes.
Ndopandavhura trade yangu. And my target was only like 20 pips. Ndazotovhara riri pa 17 pips. Because harina kuzonyatsosvika pene nchida kuti risvike ndaratanga kudi kudona.
All right.
So if it was a case yekuti ndaramba ndakarivhura trade izvo, I would have made less than $60 because ndenda toenda trail stop loss yangu inge above entry price. So when you're scalping, if you decide to say, okay, I'm gonna scalp today, then you need to be on the charts so that you can see how price moves. The moment you start seeing price movement, you get to understand more. Let me show you like the daily candle for pound USD, the daily candle for NZD USD, and the daily candle for Aussie dollar, right? So you can see the candle for Aussie dollar, the daily candle, when market opened, it went lower and then it shoot up. At one point, the whole of today, this candle was a big green candle. This whole section was green.
Yes.
But if you come and look at Aussie dollar, right? Aussie dollar eventually, let me grab this. So from here to here, at one point, it was a green candle. But the times that they move both of them to the upside, they'd have been different. Let's go to a lower time frame, say an hourly chart. So you can see Aussie dollar only moved to the upside from 2 until 4. But if we go to New Zealand dollar and we go to the hourly chart, it also moved. You see, it was just moving up since the market opened. New Zealand dollar was just going up. You see? So meaning you'd have seen New Zealand dollar having a big bullish candle at a time when Aussie dollar was having a bearish candle. You'd have known already from there, if you're looking at the market, that okay, it's just a matter of time. Aussie dollar is also going to move to the upside. And when you look at the calendar, that's when you see, oh, we've got initial jobless claims. Those are probably the catalysts that are going to move price to the upside. And that's exactly what happened. That's like the scenario that always plays out in the market. Because Aussie dollar and New Zealand dollar are correlated. When one goes up, the other one goes up. They are correlated pairs.
Yes.
and mover in the same direction. So we find out that there's a time when that direction does not correspond. You see, look at the hourly candle right now on New Zealand dollar, right? And look at the hourly candle on Aussie dollar. They're the same in terms of structure. But if you look at the Aussie dollar, the hourly candle for Aussie dollar, what has it achieved in terms of price? It has traded below the low of today. And if you look at New Zealand dollar, it has not traded below the low of today. That in itself is this scenario here. You see, Aussie dollar running stops below an old low. Then you've got New Zealand dollar returning to fair value only, and then price moving up. Where is fair value on New Zealand dollar? There, that high probability bullish order block. See? So you have to be in a position to understand and see all these things happening. So when New Zealand dollar was failing to create a low, yet their correlated pairs, Aussie dollar was trading below the low of today. You see? That's a trade. If you're scalping, that's a trade. See, this move here, because already it's almost like 17 pips at the same time that Aussie dollar has traded below the old low.
That's the run off stop.
Yeah, it's rating my sell stops below. Yeah, below an old low, there's sell stops. Above an old high, there's buy stops. If you go to Euro USD now, you can see Euro USD, today's price chart, control Y. It has traded below today's low. You see? There, it has traded below today's low. But it was only just returning to fair value. You see, when you're scalping, all these things will be very important because a move from equilibrium of this fair value, once this candle touches equilibrium, then you're going long. Already you're talking of 18 pips. You see? Because the market would have shown you its intended directional bias right there. You see?
Yes.
So anything that retest, that comes back into this range here, it's in fair value, right? Even if you have to use my fibs, right? If you have to use my fibs to go from the low where the initial move started to the high, you see? There, 62% retracement level, OTE, 79%. That's discount. Price now moving back to the upside. The first time it came was here during the initial jobless claim, New York Open. You see, there, 1 o'clock, and price is in fair value. And then it moves to the upside, 43 pips in 3 hours. That's a scalp. So you have to be in a position to be there on the chart and see what price is achieving in terms of its delivery. So you can see pound USD traded below yesterday's low. Pound USD and NZD, no, and AUD USD, they've got the same structure. They're all running sell stops. They're rating sell stops in fair value. You see? Pound USD and Aussie dollar, they're all running sell stops. They've created a new low at the same time that New Zealand dollar and Euro USD, they're struggling to trade below yesterday's lows. That's returning to fair value on Euro USD and Aussie dollar, and then running stops on AUD USD and Pound USD. That's SMT divergence that we spoke about long time back. Running stops, then the other one is only returning to
fair value.
Fair value, you see. So a move to the upside is forthcoming. Right, so we're going to continue with our week 5. We're going to continue with our week 5, and this is the last lecture, and it's just a general guide on how you have to approach the market, things that you have to know when you decide to be a scalper. You see, it's a very profitable way of trading, scalping, right?
Yeah.
And especially if you can a good risk manager, right? Could open my trades at the right place at the right time, and not just look for trades whenever you feel like, no, let me trade when there's nothing to trade. You see, if you become good at that, scalping is quite profitable. So in regards to the things that you have to really grasp when you are looking for your mega trades, your mega scalps in the Forex and currency market, there's things that you have to understand. Just a second, let me reply this kid here.
Okay.
Right. So there's things that you have to understand, right? And these are like general things. It's like our 1+1. 1+1 prepared us to learn Pythagoras theorem. You see, 1+1 prepared us for the quadratic expression. Later on in life, if we didn't know 1+1, equations would have probably been hectic for us in high school.
Yeah.
So that's the same scenario you have to apply when you're trading currency. So the financial markets, right? There's no two ways about it. Trading is very hard, you see. And you really need to be at your game. How best can you profit from here? Instagram traders, Twitter traders, Facebook traders, those people post those big profits.
Yes.
There's a lot that goes on behind the scene which people do not understand. So don't fall for that. So these markets are really hard in nature and they're industrious. So we're talking of financial markets. Supply and demand factors are the ones that move them, as in order flow. Wars, economic drivers, interest rates, imports and exports will have a greater impact on these kind of commodities. We have seen what happened with the Hamas, which is war.
Yes.
What it did to gold, it went up, left a vacuum, went all the way up. You see, economic drivers, these are like the fundamentals that we see on a daily basis. Things like NFP, CPI, they've got an impact on the market. Then interest rates, the most mover of markets, high rate versus low rate versus higher rates. You're coming with your institutional buyers. Imports and exports will have a greater impact on these kind of commodities. Now, our analysis as currency traders, dollar-based analysis. The US dollar, generally when the US dollar is declining, this allows commodity prices to what? To go up. The opposite applies. When dollar rises, this pressures commodity prices. So when dollar is weak, commodity prices go up. There's like a demand for commodities. So basically when dollar is up, gold goes down. When dollar is down, gold goes up. Now, it's not always the case. There can be times lasting as long as a year when commodity prices and the US dollar, they move in the same direction. So it will happen sometimes in that way. Then we've got, you have to understand what we call quarterly shifts. The impact of quarterly cycles in these markets as a whole can never be overstated. Every 3 months or so, we have spoke about this, the markets will tend to form an intermediate term turning point. When you look at the monthly chart, right, let's just go to Euro USD. Okay, let's go to Brent. Let's go to Brent. Every 3 months, there's a shift in the currency and commodity markets. Let's just look at any chart. I need one which is clean, one which I haven't touched. Right, let's go to USD CAD. So this is the monthly chart for USD CAD. You can see the last 3 months, price has been bullish. The last 4 months, 3, 1, 2, 3, bullish momentum to the upside. And if you look 3 months prior to that, trading into supply, market moves to the downside. This move here, the bullish move that we have seen recently in USD CAD, can you see its origin? What is the origin of that move?
Bullish order block.
You see, from this bearish candle, right? Yes, this is a bullish order block, right?
Yes.
But what is the origin? What gave emphasis for someone to be a long trader here? This whole 3 months.
Trader below the previous month. And then if I close above that, if I trader below that previous month.
This one.
You can try my stops. I mean, my buy stops. You can try my buy stops and then if I shoot up.
Right. When price trades below an old low, it's running sell stops. Below an old low, there's sell stops. Above an old high, there's buy stops. So which low are you talking about? Is this the one that I've marked?
Yes, yes.
Right. I want you to look further to the left. What do you see when price is trading below that old low? Yes, you are right. That's intermediate term lows, like what we spoke about yesterday. Price trading below an intermediate low. But if you look further to the right, what do you see? Price was already in what? In discount, right? Right there.
Yes, yes.
See, price was already in discount. But prior to that also, you see, these are the things that you have to polish on, right? You can see these two huge bullish candles.
Candles, yes.
You see, that's the market signaling that it wants to go higher.
Up.
You see, it's giving you its intended directional bias, right? So once you see, because prior to that, we had this is more like a consolidation on the monthly, but if you go to a weekly, there's big moves there. So prior to that, we had market basically consolidating. Now, if you start from the candle that gave origin to this move to the upside, you see, that's our expansion, right? If I grab my fibs from the low to the highest point of this whole expansion, you see where the fibs are very important now. This is where fibs become important, right? So you'd have already noted that, okay, this expansion 1, 2, and 3 that created the high, we've got a bullish order block, but it's not high probability. Then after that, what area do we have? We've got a fair value gap. That's on the monthly chart. So prior to all this, you see, you're going to be seeing, let me do that. So you won't have, right, let me redo it again. I want a white background. Right. White background right there. So you see, once you see the expansion happening, that's on the monthly chart. Then you are grabbing your what? Your fib, because market has already shown you its intended directional bias. So using the fibs now, you are trying to see, okay, where can I likely get into this move? Where can I catch high probability trade setups? You see, where can I catch high probability trade setups? So you can see then the following month, price comes to 62% retracement level, pushes to the upside. The next month, price stays above, but you can see this second bearish candle, it came into the fair value gap. You see? Then you see the third month, price did not come into discount. 4th month, price did not come. 5th month, price is already up. That's where you're just monitoring price. You see?
Okay.
But once price comes in now, you see there, right there. This month here that traded and filled the gap. The following month, you'd have been only hunting for longs on USD CAD. Where do you hunt for longs? You'd have already noted now, previous month low, right?
Yes.
Previous month low. So you're now waiting for price to trade below the previous month low. Offset accumulation, number 1. Price trading previous month low. That's trading market reversals. You see, everything starts aligning, right? And most probably during that time, there's going to be positive fundamentals in regards to, say, US dollar, because that's how it's going to move to the upside. Then you see what happens next. Boom. And then market takes off. If we go to a lower time frame, let's go to H4. Let's go to H4 and see if that area is covered. Where's the red line? Where's the red line? The red line is the right there. You see? Right here. Right there. So this would have been the previous month low. Then price trade below that previous month low, trade below, close above, boom, market shoots up. Okay? Market, even if you are to sell, when price trades below here, you see right here, okay, let me zoom in so that we can see clearly. Right here. So the red line, that's our month, previous month low. So the moment price trades above here, no, need a red color. The moment price trades below the previous month low, you're already in buying mode. You're looking for longs only, right? So if you are using a monthly level, right, then you have to hold on to that trade, because monthly level from here, you want price. You see how it consolidated below an old month low. That's offset accumulation. See, then eventually, boom, market expands to the upside. You see, this whole move here, all the way down, that's 110 pips in 4 hours. You see, 110 pips in 4 hours. If we go back to the monthly chart, let's go back to the monthly chart. Let's clear this. So what I'm illustrating here is quarterly shifts. Isn't it?
Yes.
It's quarterly shifts, so that you understand that every 3 months, there is a major shift in the market. So once price has found support in discount here, you see, you're already in a buying mode. That means every retracement into fair value, you're looking for longs. Now, this now becomes a breaker. You see right here, this is previous month high. This green candle becomes a breaker. And from there, you'd have already noted that no, price has now found support in discount, right at the 62% level there, which is a fair value gap. Anything onwards, you are looking for longs, because the monthly chart takes precedence. Your bias would have been bullish. So you'll be looking for long entries only on lower time frame. A return to a level. You see here, this month here, the second green candle, price was just rebalancing, and then it moves up. It was just price rebalancing and moving to the upside. Then ultimately, price pushes all the way up to the upside. So now, when you talk of scalping and quarterly shifts, you have to understand that every 3 months or so, the markets will tend to form an intermediate turning point. Like what we are currently seeing right now. It's just the beginning of November, but this could be a turning point now into this market. So you might find out that November, December, and January, market is going to trade lower. You see? Or
Okay.
if we are to keep going to the upside, then this current candle on USD CAD is going to close bullish. Then you know that market is going to still go
Up.
You see? So every 3 months or so, the markets tend to form an intermediate turning point in most cases. Then you've got seasonal tendencies. Seasonal tendencies are important for mega trade selection. If you're scalping, the seasonal tendencies may or may not be a factor. Seasonal tendencies, these are basically market history tends to repeat itself in the markets. History tends to repeat itself. You find out that dollar index during election year, seasonal tendency points to a bearish dollar during election year, which is the year that we are going into 2024. There's going to be elections in America. So dollar is bound to be weak. You see, that's a seasonal tendency. Dollar is bound to be weak. If you go onto the chart, onto the dollar index chart, and you go back in history, each and every election year, you see that the dollar will be bearish for that year.
Okay.
You see, that's a seasonal tendency.
Yeah.
Now, when you're scalping, understand that, not just scalping, when you're trading Forex, understand that every significant mover in the Forex or currency markets will have its roots in the price action of the dollar index. While on the very short term, and especially when it comes to intraday trading, the US dollar can consolidate and you can still see currencies trade stronger or weaker against it, especially during holidays in America. The dollar will be consolidating, but the other currency pairs, they're going to move. So the search of mega trades in currencies will depend on the support of the trade idea in the US dollar index. If you don't have anything like ukangochitsvaga like uchiita analysis yavo and it, if you don't find anything from the dollar index to support your trade idea, yeah, that might be a risk trade to track. You see, you must have a clear understanding of it. Okay, dollar rate famba so Aussie dollar must do like this. Dollar rate famba in which direction? Is it bullish or is it bearish? So if you come to US dollar index right here. So this is US dollar index, the H4 price action, right? H4 price action. Let's see today's price action, right? So this is US dollar index, control Y. So price is traded above today's high right there. So price is traded, it has created a new high. If you go to Euro USD, price also is a mirror image of what we are seeing, right?
Yes.
Euro USD is returning into a fair value gap on the hourly chart, trading below the low of New York Open. If you go to US dollar index, same thing. You see, price is trading into fair value gap right there. Fair value gap, price trading to fair value gap above session highs. You see, we haven't traded above yesterday's high.
Okay.
You see, so when price traded into this fair value gap at lunchtime, you see there, 1 o'clock.
Yes.
Then eventually we had those news, those initial jobless claims that came out negative. The one I mentioned to you to say, Aussie dollar should move to the upside. Look at that time, dollar was in fair value, right? Into a fair value gap. The negative news came out. It went down south, 30 pips. See, after those fundamentals. At the same time, Euro USD, at that moment in time, it was also trading into fair value right here. You see?
Yes.
Then it went up 35 pips. Aussie dollar went up 20 pips. Same applies, pound USD went up almost another 20 or so pips. Say 30 pips. Same thing if you go to the USD. The USD also went up traded into a bearish order block right there, 3 p.m. bearish order block on the hourly chart. Price went up 25 pips. So understanding what the dollar is achieving in terms of price action is going to give you an edge when you are trading. You have to know the dollar index like the back of your hands. That's something which you're not going to run away from. You have to understand the dollar index. So focusing on the majors when you're scalping is the ideal way to approach it, because you can get 10, 20 pips from each and every one. Then at the end of the day, you end up with like 60 or more pips. So whether you like to trade the majors or crosses, you need to focus on these majors for your trade selection. Number one, fiber. That's a given, right? Number one, fiber. So fiber is Euro USD, right? Fiber is Euro USD. That's the most traded currency pair. Then you've got cable, pound USD. You've got Aussie, AU, Aussie dollar. You've got Kiwi, NZD USD. Then you've got Swissy, USD CHF. You've got USD CAD, referred to as the loonie. And then you've got yen, the beast. This one here, that one is for another day. That is a beast of a currency pair. So all major moves can be determined with these 7 pairs, and they are all you ever need to trade, right? Anything outside of this, you have to first understand these guys. So by the time you look at, say, GBP AUD, you see, by the time you look at pound against Aussie dollar, you have to be in a position to really understand pound USD. You see?
Okay.
By the time you look at, say, NZD CAD, you see, these are minor pairs, you see, these are cross pairs. By the time you look at NZD CAD, you have to understand what NZD against dollar is doing. You have to understand what USD CAD against dollar is doing. You see? So it's always good to focus on the majors. Yes, their minor pairs, they are also good, but they are too predictable. Their price action is too predictable, number one. Their pip value is less. All these currency pairs, all these ones here, these major currency pairs, 1 pip is equivalent to $1. You can even find USD CAD, USD CHF, I mean. Okay, USD CHF. USD CHF is even more. You find out that 1 pip there, it will be equivalent maybe to like one, if you're doing standard lot size, one standard lot size, which will be $10 a pip. If you're trading USD CHF, it will be actually maybe like $14 a pip. You see? So the pip value, let me just double check that. Let me just cross check with C Trader, because C Trader gives you the proper value of the pip before you enter a trade. Now, eventually, once you are doing live trading, eventually you have to use C Trader.
Okay.
Yeah, eventually you have to go and use C Trader. It's a more professional platform, right? So you see, I'm on Euro USD here. If you look, can you see my chart, right?
Yes, I can see it.
This one here with the C Trader, the one with the bulls.
Yes.
Right. If you look there to my right, there's where the sell button and the buy button is, right?
Yeah.
If I go to quantity, which is the lot size, right? If I just move there, you can see pip value, it's saying $20. You see, pip value, it's saying $20. Yeah, that is if I'm trading 2 standard lot size. If I go to 1 standard lot size, it tells me $10 per pip. If I go to USD CHF, right? USD CHF, if I go to 1 standard lot size, let's see. I think now because market is almost closing, but you can see the pip value is like $11.10. You see?
Okay.
Which is more. You see? That is more. On Euro USD, 1 standard lot size is $10 a pip. But on USD CHF, you can see there it's $11.10 per pip. If you come to USD CAD, that should be another one also. Let's go to standard lot size. USD CAD is less. You see, one standard lot size on USD CAD is only like $7.25.
Yeah.
If you go to, let's go to Aussie dollar. Aussie dollar should be $10 a pip. Aussie dollar is $10 per pip.
Okay.
So you can see when you're trading, these things, they matter, especially USD CHF. The moment I go to 2 standard lot size, which should result into a $20 a pip, right?
Yes.
In actual fact, it's like $22 per pip. You see? The value is more. But then when you go to lesser pairs, let's say NZD CHF, right, which is a minor pair, it's a cross pair. If you go to a standard lot size on NZD CHF, this one is paying NZD CHF $11 per pip. If you go to, let's see which one should I try? Okay, these are majors. Okay, all symbols. Let's see. Aiwa, chimbonetso once wakunyatsoziva inonzi MT5 haichachinetsi kunzwisisa ichi. It's very easy. So you see, this is Euro JPY. If you go to one standard lot size, which is supposed to be $10 a pip, but look, the value is only like $6 per pip.
Okay.
Which is less now because you're now trading a minor currency pair. But on major pairs, NZD, USD, if you go to one standard lot size, it's straight up $10 a pip. If you go to USD CHF, it's more. If you go to Euro USD, it's one standard lot size, that's your $10 per pip, straight up. There's no 2 cents about it. For you to trade my standard lot sizes, account you can play around with leverage, but that's a bit risky. You can deposit maybe like 500 and then you increase your leverage. You can trade standard lot size, but the chances of blowing up, they'll be very high. Higher leverage is a killer, you see?
Okay.
Yeah, but once one equity, for let's say 1.5, 2,000, right? Eventually you're gonna get there. Then it's ideal to go to trader, say at least one standard lot size, or maybe you talk of 0.9 or 0.8, my $8 a pip, $9 a pip, or $7 a pip. $7 a pip, you only need 10 pips to make $70.
Yeah.
And you can see how easy it is to make 20 pips a day. If you're trading 0.7 and you decide to say, okay, I'm going to target 20 pips a day, that's like $140, which is a lot.
Yeah.
Which is a lot. So understand what my majors, in terms of pip value, they pay out more than my minor pairs. Right. So continuing, focusing on the majors when you're scalping is ideal. Now, there's also what we call the futures market. We're going to talk about the futures market later on, I think in week 7. So each and every major currency pair, like Euro USD, Pound USD, they have what we call futures contracts that trade respectively with the respective major currency pair. So there's what we call Euro dollars, Pound, British pounds, Australian dollars, New Zealand dollars. These are futures markets, right? They give you an emphasis. Maybe you don't want to focus on dollar index, but if you're trading Euro USD, you have to understand, okay, let me go to my watch list, investing.com, watch list, the futures market. There's what we call the Euro futures. It's a futures market for the Euro. Basically, it almost moves the same direction as Euro USD.
Okay.
Yeah, it moves the same direction as Euro USD. So you can see here, this is the daily chart of the Euro futures market. It's got a lot of gaps. If you go now to Euro USD daily chart, you can see it's almost exactly the same price action. You see, it's the same price action like the one we are seeing here. So you're going to say 1, 2, 3, 4. Those are all consolidating inside this big green candle. I think an up move is coming. Same applies here on Euro USD now. The currency pair, you've got 1, 2, 3, 4. They are all inside this big bullish candle. And up move will be forthcoming. So the futures market, we're going to talk about it in detail a bit later. So we're going to continue again next week.
Yes.
With our week 5, finishing up on this mega trade class. We'll continue on it next week. But for now, your assignment, right? It's still on Aussie dollar, right? Your assignment is still on Aussie dollar. Look at the daily candle right now at this moment in time. What is it achieving? It's filling up the gap.
Yes, it's filling up the gap, yes.
Right. These are the things you have to be in a position to see when you are reading the chart. You see, price is filling up the gap after trading from a premium array, an hourly bearish order block. Something must have happened in the market, something that's giving dollar a boost. Let's see if the calendar has got something. Let me just go to the calendar quickly.
Calendar ndo shamari page going everything's on it.
Hey, before anything else. Right, you see, Powell speaking. Can you see there?
Yes, 2100.
Yeah, just now. He has started speaking right now. And the fact, whatever he's talking about, it's giving a major boost to the dollar. There you go. You see? The dollar is now pushing up. This is the hourly candle that just opened right now on dollar index. It opened just now 7 minutes ago, and it was already moved 17 pips. If you go to Euro USD, the hourly candle that just opened now has dropped 16 pips. So whatever he's talking about is giving boost to the dollar index. You see, it's giving a boost, strength into dollar index, weakness into the major currencies. So you find out that USD CHF is going up.
Now,
yeah.
Trade.
Right. No, not really. Remember what Powell talks about, right? Powell gives what we call forward guidance. Right?
Okay.
Yeah. Powell gives us a forward guidance. Whatever Powell talks about, yes, most cases it has got an instant reaction in the market, but over a period of time, eventually market follows through. So whatever he speaks about has got a lasting effect in the markets. Of course, instantly when he speaks, the brokers, the liquidity provider, they'll take a chance in stopping out people from trades. But if he's bullish on dollar, let's say he's hawkish, right? That's what they refer to it. If Powell is hawkish on dollar, that hawkish sentiment is going to last maybe a month or even 2 months, like what we saw recently. The past, you see here from, when was this? From July, there was a hawkish sentiment from Powell, and you can see 11 weeks, market was just bullish. So whatever he talks about lasts for a while in the market. Yes, there's going to be an instant reaction, but over a period of time, you have to be in a position to take note, we've got a hawkish Fed, meaning you're looking for longs on dollar. If we have a dovish Fed, means we are looking for shorting opportunities on dollar. We are looking for weakness in dollar, which will in turn will be vice versa on the currencies. So right now, whatever he's talking about is giving a boost, a slight boost. So most probably, price is going to trade above yesterday's highs, you see. And then from there, you have to look at the calendar tomorrow and see what is there on the calendar tomorrow. You see, we've got RBA monetary policy. We've got GDP for pound. That's in the morning. You see? And then after that, there isn't much for the dollar. You see? There isn't much for the dollar. So you have to be in a position to understand the Fed, like what sentiment are they sharing? So most probably, no, we are going to keep our rates as they are for the unforeseeable future. Then you know what Richard boost the dollar because he's keeping higher rates. He's keeping higher rates. Yeah. So that's what's moving the price. So your assignment is still on Aussie dollar. Now that the fair value gap is almost filled. I think we have even filled it now, right there. Yeah, almost. Right. So we've got price now in discount. Officially, our high probability discount level. Now, the reason why I'm giving you this as your assignment, it's only that you will be asleep, man, by the time those fundamentals come out. The reason why I'm giving you Aussie dollar is because of this RBA monetary policy statement. It's going to have a big impact on Aussie dollar. You see? So we are only going to see the effects of this monetary statement when we wake up. But yes, take note how price closes today. So probably that monetary policy, it's going to boost AUD.
Okay.
You see? That monetary policy is going to boost AUD USD to the upside because AUD USD is already in discount, a daily bullish order block. AUD USD in discount. So with those monetary policies coming through, what you can do is put a buy limit order. Put a buy limit order at on your demo account. Put a buy limit order at 0.635.
Right.
Put a buy limit order. Right. Let's do this together. Right. So I'm also gonna put my one. Okay, this is for class purpose. I'm gonna use the lowest lot size that I can because this one is a live account, right? So we're gonna put a buy limit order at 0.6352, right?
Okay.
So we go to pending order. We want to put a buy limit, right? So you select buy limit there, and then you put your lot size. I'm gonna go with 0.05. There's not much in this account, only like $700. No, $400, I think. Our price, our entry price, we want to enter long when price reaches 63520. You see? 63520. That's our entry for our buy limit order, so that when price reaches that level, it should trigger and then activate our buy position. Our stop loss, right? Our stop loss, we're going to put it, from here, we want to put it, that's going to be a big stop loss. Okay, we need to put it right. Okay, we're just going to have, say, 100 pip. So that's 0.6250. 62510. That's our stop loss. 62510. That's our stop loss. Then our take profit, we're going to put it at since we've got 100 pip stop loss, going to put it on the weekly highs, the high from Monday, right? Which is 0.65 That's our take profit. 65210.
Yes.
Right. There where it says expiry, right? Where it says expiry, I want you to choose specify day. Right.
Active.
Yeah.
So expression GTC apapo ndoisa.
Right. I want you to put where it says specified, right? And then you choose specified. Tomorrow, right?
Yes.
You choose Friday. Yeah, the time, just put it the current time, which is 21.5. The current. Okay,
so 10, 23, 21.5.
Yeah. So that if price does not reach that price point, this trade must close before market close tomorrow.
Oh, okay.
It must cancel the order. Then once everything is in place, you just click place. You see? Yes. So now we have our buy limit order on AUD USD. We've got our buy limit order in place. But right, you see now the fair value gap has now been filled, right? The fair value gap has been filled. So already we are combining two classes here, placing limit orders, and then also taking note if price is going to find support on that bearish order block, and that's a high probability bearish order block. And you can see where I've put our stop loss. Yes, it's quite a bigger stop loss range because of this consolidation here. You see, this consolidation is the one that has given me, because we still have an old low here. If price breaks this old low, then our stop loss might be vulnerable. But as it is right now, the stop loss is well in a safe zone, right?
Yes.
Right. So that's the assignment for today. So I'm hoping those monetary policy statement from RBA is going to boost AUD USD only after it has traded to our entry price. So I'm hoping it's gonna, because most cases, you see, in most cases, there's no central bank that can give out a monetary policy. Currency it a week. In most cases, central bank no support currency yaro.
Yeah. Okay.
Even Zimbabwe is not currency. Achitaura mveze Reserve Bank. Aninga chiko booster oma bond yayo.
Yeah, this also.
So that's the same sentiment that I'm trying to approach this.
Okay.
Because now we've got our discount area in place. So yeah, just take note of that. Take note how the daily candle close. We might see maybe a huge rejection, or price might keep going further to the downside. So all we need is for this entry to be triggered. Once it's triggered, if it triggers, say, tonight or anywhere before, say, lunch tomorrow, if it triggers anywhere before lunch, you treat it like a scalp. You see? Treat it like a scalp because it's Friday. Treat it like a scalp, yeah. But if it doesn't trigger, then yeah, it won't have triggered. So yeah, that's pretty much about it. And this is kind of, we know when phones are, you know.
So far, pana.
So far, so good, ne?
Yeah, so far, so good.
No, airibo. Tinolinka.
Morala Moshe.
Moshe mshamengo. Sharp.
Sharp.